Hello and welcome to your Canadian guide to worry-free investing. Listen folks, I'm super delighted to bring you this week's presentation because it's one you simply do not want to miss. This very well is a presentation that can be a life-changing experience for you. So sit back, relax, and enjoy this tremendous presentation. The first question you might ask yourself is, what is worry-free investing? Well, worry-free investing is the safest, surest, easiest way to make money in the stock market. Sound good? I thought you might say yes. Listen, I've traveled around the globe and I have never, and I mean never, seen anything safer, anything surer, or anything easier than what you're about to see here today. So let's dive into it. One thing that I want to bring to your attention right away is that we have a supporting document for you that's got some great guidelines built right into the product. It's called Guide to Worry-Free Investing. So let's just jump right into VectorVest. In VectorVest, if I go right up to the Views tab, over on the left there's a Special Reports section. And in there, the fifth one down is Guide to Worry-Free Investing. When you click that, the guide will pop up on the screen and allow you to click out to see or view the PDF online. And of course, you can also print it out, put it on your desk, and it'll be a wonderful framework to work from going forward. So let's tell you all about it. Becoming a worry-free investor couldn't be any easier, as we mentioned earlier. First consideration is to minimize risk, and the best way to do that is to start off on the right foot. And of course, the best way to do that is to buy high relative safety, buy-rated stocks. Relative safety stocks, the stocks with the highest safety ratings in VectorVest, they're the companies with tremendous financial performance. They're the companies that just do nothing but grow earnings quarter over quarter over quarter, year over year over year. And that's the engine that drives stock prices higher. So the only real question is when to buy them. And there's a couple of factors there, but certainly one of the best ways to start is to look for a buy rating right within VectorVest. You'll see here in a bit that market considerations can also come into play, but it's really that simple. High relative safety, buy rated stocks. Next, you want to spread your risk. You want to diversify in what and when you buy. You don't want to buy all of your stocks out of the petroleum sector, for example, or even certainly a particular industry group. So what we suggest, up in Canada, the best that we've seen as far as return and mitigating some risk here is no more than 3. And so certainly the less stocks in a particular industry, the better. In an ideal situation, 10 unique industries may be the way to go. But in Canada, there really are just a few industries and sectors that really move and shake up there altogether. Petroleum, of course, being one, banking another, mining, these types of things. So you just don't want to get too unweighted in any one category is the main thing. And you might also consider not buying everything on the same day. So if you're going to build to a basket of 10 or more stocks, which is what we suggest, maybe you just buy a stock or two a day on a confirmed up signal. Just buy 1 or 2 the first day, 1 or 2 the next day until you fill out your basket. And finally, you just got to limit your risk once you're in. You got to use stop sell prices. You got to use the stop price in VectorVest because you're going to see it's one that works. So let's dive into it a little bit more. Let's focus on minimizing our risk out of the gate and buying high relative safety stocks that have buy ratings. So to do that, I'm going to go right over into VectorVest and we'll kick things off. So I'm going to go right up to the Viewers tab. In Viewers, I'm going to go over to Stock Viewer on the left. In Stock Viewer, what we're going to do is, every day we rank stocks by VST from top to bottom. That's the default ranking. Stocks with the best combinations of value, safety, and timing. When we start to really focus on the worry-free theme, we want to look at the Stock Viewer a different way. We want to put most emphasis on relative safety. And so you're going to see here that I'm going to rank the stocks by relative safety. We'll make sure that we do it in a descending fashion. So Saputo Group is right up at the top. Right? It is the safest stock. It's the safest stock in the database right now. Followed by Metro and SNC, Canadian Natural Resources, and so on down the list. Folks, this is a great place to go fishing for worry-free investing. Why? Let's take a look. One of the best ways to display financial performance and display the great tendency that a stock is going to likely move higher in the future is to look at that relationship graphically. Look at how well these companies grow their earnings quarter after quarter after quarter. So I'm going to right click on Saputo, go to View Stock Graph, and in here I've plotted price along with EPS, or earnings per share, which is a 12-month leading forecast of where earnings should be at any given point you analyze 12 months in the future. Okay, so the most recent data point, we're looking 12 months ahead. And that's significant because it gives you a window into the future, a window into the likelihood of stock price appreciation. If that projection continues to move higher as it is here, that means they're going to be making more money a year from now than they are now today. That's the likelihood, right? That means the likelihood is also stock price will continue to rise. And so if you don't have EPS available, just over on the right, you can always add parameter, go to capital appreciation, and EPS will be in your list. Let's look at a 10-year graph just to see the extreme correlation between the two. So when the 12-month leads begin to head sideways and turn down, you can see the stock price does not appreciate. However, when they right the ship and the forecasts begin to climb, that's when stock price performs very well. And of course here with the top relative safety companies, they generally have smooth, steady rising earnings patterns. And that would translate into some of the smoother, steadier climbing stocks in the future. It's as worry-free as you're ever going to get. Let's dive a little deeper. So at VectorVest, we like to play something called the birthday game. My birthday is December the 9th, so you need to give high relative safety companies some time to get that price growth. Okay, so I'm going to start back in 2015. I'm going to go to December the 9th. And I'm still sorted by relative safety. It's a little bit different rank. Some of the stocks are the same, but it's a different ranking order for sure. Okay, we've got Metro at the top, Wind Park. I see Dollarama in here. Okay, let's go ahead and quick test the top 10. And this will sort of prove the point. You know, high relative safety stocks given time, certainly in an up market situation, they're going to have a very strong tendency to go up. And so here you see 8 out of the 10 have done just that, really in less than a year. Okay, so let's go back another year. Quick test the top 10, and bingo. 7 out of 10 have gone up, 17% return, 10% a year, and that's with no money management whatsoever, and up and down markets in between, and you know, the whole bit. So there's another level that we're going to take this in a second. But what I'm trying to really hammer home is this is a great pond to go fishing for your worry-free, retirement-minded portfolios. High relative safety stocks, they're the way to go. Let's go back another year. Typically, the further you go back, the better you do. So we'll go to the 9th year. Quick test the top 10. 15%. Kind of hanging in there, right? Let's go back another year. Ask yourself this while I'm doing that. How many of these tests have had a positive return with no management whatsoever? And now we'll go to the 10th. Quick test the top 10, and look at that, 115%. We got some big time winners in here. ATD's gone from 16 to 65. Dollarama from 29 to 101. LGT from 12 to 38. SJ from 19 to 46. You get the picture. 9 out of 10 have gone up. No money management. 30% a year return. I can't emphasize enough, high relative safety stocks is the way to go when you're looking for worry-free portfolios. From here, there's some interesting points to get into on taking things a little bit further. And believe me, we're going to get to some tremendous performance here in a minute. One thing to consider is to not overweight yourself in any particular industry or sector. We discussed that earlier. Out to the right, VectorVest every day in any viewer that you're in is going to list out the industries and the sectors. So we said no more than 3 per any single industry. The good thing up here at the top right now is I only see one instance in the top 10 anyway where you have 2 stocks in retail food. And that's still under 3. And so this basket of 10 would have been a true basket that we could have participated in. Okay? You don't want to find yourself in a situation where you got 10 out of 10 petroleum pipeline or field services, things like that, or chemical fertilizers. So that's an important consideration, and VectorVest can take care of that for you on a mechanical notification basis. We'll see that in a minute. So don't worry about having to remember all this stuff. We can just bake it right into a trading system for you, and we're going to do that. Okay, so that's an important point. The other thing to consider here is at some point, some of the stocks, while extremely likely to go up, may not, or they won't go up forever. And so at some point, you've got to limit your risk. Remember that? And that would be to use the stop price, STOP. So with Agrium up here at the top, it was $98.16 on December 10th of 2012. We had a published stop price of $93.80. Should the price ever fall below the stop price, you'll get a sell, just as we did here with Shaw. You can see the price is $38.80, the stop price is $39.10. So even though it's one of the safest stocks in the database, we give it a sell. And yes, you should sell it when that occurs. But it might go back up. Well, yes, it might. It very well might, but it also might continue to go down. And so there's always another high relative safety stock right there at your fingertips to replace Shaw and get you in a good position in a stock that's on the rise right now. That's the mentality we got to get you into. Okay? We want to control a basket of 10 at minimum high relative safety stocks that are moving higher week after week after week, and when they start to underperform, let's cut that one out and get a new one in. And so the only other thing to really take into consideration is the market. And the market is extraordinarily important. And so when I say the market, I mean market direction. And so I'm going to just quickly take us over to a market timing graph. In a market timing graph, I'm just going to get a little bit more data here. Take a step back to about the beginning of 2015. Okay? That should do the number. We can see clearly on this depiction if the top candlestick chart is the global price movement for the Canadian markets up and down. The market doesn't just continually move higher month after month after month. In some stages, there's some month-over-month correction. Certainly from March into January of this year, for example, March of 15 into January of this year. So we publish a confirmed call. And this is wonderful for worry-free investing. It's the surest timing system that we have. For example, when you get a confirmed up call, it's as sure as you're ever going to be that the market is likely to continue to go up from there. When you get a confirmed down call, it's as sure as you're ever going to be that the market is likely to continue down from there for at least a week or so, and usually longer. And so here is a clear depiction. Here was a confirmed down call that came in back on May the 12th of 15 that went all the way up into March of this year. And that was not a good time to be invested, or certainly buying anything new. And that's the main point I want to make. It's not a good time to be buying anything new, certainly when the market is in corrective mode. When the market stops falling and starts going up, then it is the time to start reloading stocks into your portfolios and really be investing more heavily when the market's on the rise. And so the confirmed up calls provide us that situation. And so the earlier you get in towards the confirmed up, typically the better you're going to do in that campaign. And so we suggest that you buy, if you like, you can go 10 right away, but we suggest you buy 1 or 2 stocks a day as a safer, surer way to go. And it's just easier to do as an investor as well. Just buy 1 or 2 high relative safety stocks a day as the market is rising after a confirmed call is issued. You stop buying stocks, period, in a confirmed down situation when the market is falling. So, in a confirmed up when the market is rising, if you sell a stock that hits a sell recommendation because it went below the stop price, you will replace it. If you have a stock that hits a stop price or gets a sell in a confirmed down, you don't replace it. And again, it's that simple. It's just that simple. We want to buy stocks and replace stocks in confirmed ups. We want to stop buying stocks and stop replacing stocks in confirmed downs. And so let's take a spin through all of these rules and look at some results. How'd you like to see a portfolio that's up 165% with that kind of equity curve and get a little bit more information on it? How about one that's up 151, safe and sound? How about another one, long-term winners by RS, 147, 133, 111, 106. Probably should have went in the other order, huh? But you get the point. Look at this kind of performance. I mean, with such little effort. We're talking about the same things we just did earlier, except now instead of just picking stocks from Stock Viewer, what we've done is we've got a brand new folder of searches in your product in the Unisearch tool called Searches Long-Term Winners. And in there you're going to find all of these searches, basically retirement-minded searches, where all we did was replace the sort and changed it to relative safety. Okay? And so you can get this kind of performance from them. So let's go take a peek. Go right into Unisearch. And you can see over here on the left in this long directory, you're going to have a Searches Long-Term Winners folder. And so, hey, it's got my name on it. Might as well click there. Chappell's Champs search is in here. Okay, and if I want to see what kind of high relative safety stocks would fit Chappell's Champs criteria, that means they have to at least be a top 100 VST stock as well. They got to be at least $10 in price, have at least 100,000 liquidity, and some other factors that make sense from an investment standpoint. Okay, it's not a inverse ETF or anything crazy like that. They actually trade on a daily basis, right? So if I run the search, here they are, and these would be the stocks that we could buy tomorrow or today if we like. Saputo Group right at the top. Now that happened to be the highest safety rating stock in the database as well. Remember that? So great list of stocks, great list of opportunities right here at your fingertips. You just remember to buy 1 or 2 a day. Monitor the price in relation to the stop price. Don't buy more than 3, I should say, in any industry group. Only do it in confirmed up calls. Stop buying in confirmed downs. It's that simple. To make it even easier and not have to even come in here and run a search and then, remember what you run here, maybe jot it down, go to your... Listen, you can come right in here into Backtester. In Backtester, at the top, if you click New, the next thing you can do is select an existing trading system. We have a long-term winners template. If I click that and select, voila. All the rules that we just went through are right here for you, and the Backtester can do the work, as you'll see here in a minute. It can allow you to do enough testing historically to where you feel that you're on the right track, and then you can turn it over to Portfolio Genius, and it'll tell you what to do on a day-to-day basis moving forward. So let's take a quick spin and just examine this for 1 second. So the trading system looks at the confirmed calls. We're only going to buy in confirmed ups. We're not going to buy anything ever in confirmed downs. No action. The search is long-term winners. We're going to sell it a stock if it gets a sell, if it falls below the stop sell price. Remember that? We're also going to maintain 10 positions. So we are going to replace in ups. We're just not going to replace in downs. And we're going to keep things dollar weighted. So our exposure is even across all the instruments that we're buying. I can also customize this. So if I click on the customize button, I went through that quick. So let me just say right down here, the customize trading system. If you click that and go to the automation rules for up, I could choose Chappell's Champs, for example. Still use the recommendation equals sell because that's what's in the guide. Right? In more settings, I can then say, you know what? I only want to open a maximum of, let's say, 2 positions a day. Okay? If we go down to the bottom, I'm still not going to do any more than 3 in any particular industry. So we've got that diversification built in there. All the rules, everything we discussed is all right here. If I click on finish, I'll just call it C Champs, abbreviate it some. Let's buy it on my birthday. What do you say we go back? Let's go to like 2012 and give it some time to cook. Okay, we'll go to December the 9th. I usually like starting at a year because you can kind of see that progression of, but let's just go right to the good stuff. We'll go to December 9th, 2012. No, 13 I chose here. Well, okay. It gets even better the further back we go. But we'll click finish and run. We could really start on any date. That's the beauty of this whole system. And look, what it's doing the things we talked about. We're buying high relative safety stocks that also meet Chappell's Champs criteria. We're only replacing stocks in confirmed ups. We're not replacing anything in confirmed downs. You can see that the portfolios never got hit hard enough to where we had to extinguish the entire portfolio, or else there would be a flat line, because no stocks are in there. That would absolutely be flat on the equity curve. So we always had something in the portfolio throughout this entire test bed, and you can see, it's up 24% in just a couple of years. And let's look at some of this data. There's only $417 in commissions, $9.95 a piece. More on that as we get into some of the longer tests. Okay, so here's Steady Eddies. Steady Eddies has been the top performer in that whole group, and is still pulling pretty well on a current basis. You can see that all the tests, except for the one I just ran, were started on December 31st of 09, which really means trading began the first trading day, January 10. Okay, all held up till yesterday. 56% winners. So it had one of the higher marks there. Now at the bottom, you got some strategies that have more winners. They just don't have as much gains to the positions. Okay, so there's a balance there that one should consider. But look at this, 56% winning transactions, right? At $915 at 6 3/4 years, you're dealing with something like 15 positions per year. 15 transactions per year on average to get 165%, 25% annualized, 24.5, however you want to slice it. You've got a positive CalMAR ratio where the compounded rate of return is greater than the max drawdown. This is a money manager's dream. And it's so simple. Safe and sound. Similar commissions, similar return, similar percent winners, similar annualized and compound. Those are really good selections up there. Long-term winners, we're starting to get to a point now where the returns are not quite as good, certainly, right? But you can see the results here, and look how similar it is across the board. The rates of the return, similar. The commissions, similar. The rate, the drawdown, similar. It's because that's the attributes of a high relative safety stock. It's that simple. Okay? Look at the equity curves on these things. I mean, you want to talk about a money manager's dream. I mean, and to get this kind of performance going forward, okay, let's go back to the best one. Let's go back to steady eddies at the top. Look at this curve. Look at that sucker. All right. Now, I can start that portfolio if I have VectorVest right away. Okay. I can do it a couple of ways. I can take a back test. Like if I go in here and I start testing a bunch of stuff and I say, well, you know what? I actually, for whatever reason, like Chappell's Champs better. Okay. Just it works better on my birthday, or whatever the case is. You're in high cotton no matter where you go here. If I right click and convert to a portfolio, I can start with an empty portfolio. That would run Chappell's Champs today. All right. And fill out the basket. Or I could continue with the stocks that are currently in the test. That's sort of the mature trading system approach where, hey, this thing's matured and it's got great stocks in there. I just want to roll with what's in there sort of approach. Really, I've seen about equal merit either way you decide to go. So, I mean, you're in high relative safety stocks no matter what. So you almost can't make a mistake. Don't worry about it. But I could start one new from scratch just by clicking OK and open the portfolio now. Now you're going to see that one's going to run right out there and it's going to look at buying 10 stocks. Maybe you don't want to do that, right? Particularly since the market has been running since March of this year. So again, back in backtester, we had a run where we did Chappell's Champs and we only bought 2 stocks a day. Remember that? So I can right click, convert that to a portfolio, start empty, and we're only going to get 2 stocks. And guess what? We'll get 2 more on Monday. We'll get 2 more every day as long as we're still in the confirmed up. Best news is it's going to tell us what to buy. So I can either right click, trade now with Quest Trade, or if I'm lucky enough to have set up a trading account within VectorVest for that, or at the very least, I now have the 2 stocks that I need to go to my brokerage account and put in some sensible execution orders for. And that's it. If any of these stocks ever hit a sell, Genius will tell us. If we need to replace that stock, Genius will tell us. If we don't need to be invested in anything at all, Genius is going to tell us. So folks, just in summary, you've seen the safest, surest, easiest way to make money in the stock market that certainly I've ever seen, and I think you'll probably feel the same way too. We'll see you right back here next week at VectorVest University.